What is going on, traders? Welcome back to the Traveling Trader. Let us get right into it. We will start with a market analysis. The S&P 500 is at a moment of truth here, right? It's at a decision point. It needs to decide what it wants to do from here. If we take a look at the SPY, I'll go over this in the technical detail in a bit, but if we take a look at the SPY, there is a very huge decision that needs to be made here. And depending on what conditions are met with the SPY, we could see a major price move in either direction. Like I said, I'll go over that in a bit. I'll go over the top stocks, what stocks to buy, what stocks have we bought, and then the option plays. There were tons of lucrative option plays to be leveraged in this kind of market. Obviously, there are news cycles, for instance, the vaccine wave, where there's a lot of hype around the vaccine companies. There were a lot of ways to play that. The pandemic stocks, right? The COVID stocks, such as Clorox. I'll go over a big play that we had on Clorox. It was an options. It was a put spread. We were also using SPY options as a hedge against our portfolio. So I'll go over that in detail. And then I'll run through some Bitcoin analysis and maybe talk about some of the trades here. We had a big short on Bitcoin just a few days ago. And as you might have known, if you follow Bitcoin, Bitcoin has tanked currently at around $9,000, I believe. Let's see if it fell below support. Yeah, it's trading at around 9,041. We had shorted it from 9,900 after it formed this almost this inverse Adam and Eve pattern, which would be a bearish pattern. But, shorting from 9,900 was a pretty low risk, high reward play. Took profits on that. So let us jump right into it and go over our market analysis. What is the S&P 500 going to do here? Well, if you look at it, and I've talked about this ad nauseum, but there is a huge resistance cluster here. There are more reasons for the S&P to get rejected than not. Not saying it will, but there are more reasons for it to get rejected. So you have the 100-day moving average, the 200-day moving average bunched up right here, almost at the same level. You have the 0.618 fib and the 0.65 fib, this golden pocket here. And then there is this large hidden bearish divergence, where we have a divergence between what the price is doing, making lower highs, and what the some of the oscillators are doing. So if you take a look at for instance, the RSI, you see that it's making a higher high. This is called hidden bearish divergence. Anyway, what does this mean for the SPY? Well, or the S&P, they can be used synonymously. But what does it mean? You could see that we popped above the resistance line here, the line where we made a double top over the last few weeks, and we are now finding support. It did wick down below it, but we're finding support sitting on that line. And really, this is a battle between the bulls and the bears. The bulls want to keep it above this line. The bears want to push it down further. However, if we see this happen, if we see a candle close, and especially if it's a tall body, if we see a candle close that goes above, especially the 200 MA, which is the green on my chart. But if we see a candle close go above this, and it kind of looks like that, even though that looks really messy. But if it's a full-bodied candle close above the 200 MA, then I think that, a V-shaped recovery cannot really be denied. And we will head towards this 0.786 fib level, which is around 313 on the SPY. And you can also see that 313, or that 0.786, there was a period of resistance here when we did fall initially at the end of February, and it looked like it was going to be a fake out. We tested that 313 level a couple of times before then tanking. This is the full pandemic crash here. But I mean, if we have a full-bodied candle above the 200 moving average, then 313 is the definite viable target. Now, if we see a sell-off continuing today, we're down about 0.5% on the S&P currently. But if we see a sell-off continuing today and then tomorrow, remember Monday is a holiday, so we tend to see a lot of wild price action on the Friday before a Monday holiday. And if that comes in the form of sell-offs, and the S&P gets pushed down significantly below this, especially if it goes down below the last few candle support. So if the SPY goes down below 291 and we close below that, then we could see a rejection, and we will likely be headed towards the 278, 279 level. Now, here's why it doesn't really matter, because if you bought discounted blue chip stocks on the crash, even if you didn't catch the bottom, but you bought during this period of consolidation here, And we sent this out in the trade alerts. If you want access to the trade alerts, link is in the description, but I send out all of my market moves there. But even if you bought within this period of consolidation here, you're still up a great deal, especially if you bought blue chip stocks like Amazon, Microsoft, Tesla, etc. But you could also use options to hedge against your portfolio. So part of these option plays, part of this here that I'm going to talk about is buying SPY put spreads in order to hedge against your portfolio. So if we look at my Webull account here, and I recently opened this, by the way, you get 2 free stocks if you open a Webull account and make a deposit. Link is in the description if you want 2 free stocks. But I bought a $300 SPY put option that is currently up 13%. As you can see, I bought it for $8.90. It's now worth above $10. So I was hedging against my portfolio because, as you know, I'm holding a lot. I have a lot of holdings right now, even more than I expected to have. It's just that the market was presenting such discounted opportunities. And I definitely didn't expect those stocks a lot of those stocks to run up as violently as they did. Now, you guys know the usual suspects, especially if you've been around this channel for a while. The usual suspects that we scaled into: Tesla, Visa, Amazon, Microsoft, Google. But there are some new stocks that we got into. So Disney is one that we bought after the stimulus. And if you look at Disney right now, Disney is actually up a great deal, especially as they are opening parks around the world. Don't forget that they also own a majority of the sports in the US because they own ESPN, as well as, if movie theaters start opening, that's a huge win for Disney. Plus, Disney Plus has accumulated a ton of subscribers, especially during the pandemic. It is seeing a little resistance here at the 100 MA. I was thinking of taking profits and, if Disney starts tanking, potentially buying back at this period of consolidation here, this sideways period, where we will likely retest if it does get rejected at the 100 MA. Another stock that we're up over 10% on is Bluebird Bio. This is a gene editing company, kind of like CRISPR, but we also played CRISPR after it retested. So Blue was kind of a sympathy play. Plus, the financials on it looked a little bit better than CRISPR. But CRISPR is the one that is more known by name and gets a lot more of the notoriety, I guess. But after CRISPR climbed up to this resistance level and it tanked, and it looked like it was testing the support level of this previous candle that we saw on May 11th. We bought CRISPR here and wrote it up. I actually took profits on CRISPR. Looked like I could have made a few more percentage points on CRISPR as it was up 5% yesterday. But as a sympathy play, we also jumped into Bluebird, which is in the same industry as CRISPR. Like I said, not as well known. But if you looked at the chart, there was even more potential for opportunity. I'll pull up the weekly chart here, and you'll see that it was basically at the support level that it was at back in 2016. So there is a ton of profit potential on Bluebird, even more than CRISPR. And Bluebird is up 17% this week. It is coming up on the 21 EMA weekly, which is this blue line here. If it does cross above the 21 EMA weekly, can close above it significantly, then we could see definitely around an $85 price point for Bluebird, which would be a good pickup for us. I think for the long term, Bluebird is not you're not priced out of Bluebird for the long term here. And even if you look at the RSI, it looks like there is a lot more to gain. So it doesn't even look overextended here. It is obviously a late entry if you're thinking of picking up short-term profits, but for the long term, I think that Bluebird is a good entry here. Another play we had was on AMC. This time I'll jump to my Robinhood account. I have many accounts. I know this is my job, so I have to test each platform. But we had a play on AMC. So AMC, this was hilarious. The media actually messed up because there was a rumor that Amazon would buy AMC, but the thinking was that now is that, it could have referred to, oh, wow, ESPN sets deal with Tom Brady. All right, this might be a bump to Disney. We'll see. But the thinking now is that the article was incorrectly, the news stories were incorrectly referring to AMC, the theater, as opposed to AMC networks. Sometimes you can get lucky and leverage news stories. And as soon as I saw AMC pop, I sold the $6, $7 call spread on AMC. This was an easy $500. This expires tomorrow. As you can see, the value of it is zero currently. I collected $500 for this premium. If AMC stays below $6 by tomorrow, because this expires tomorrow, then I keep the entire $500. So, unless there's some miracle and a news story comes out that says, oh, actually Amazon did buy AMC, and that comes out tomorrow, which in that case will probably be asked out, then I will likely keep all of this $500 here, which was pretty easy profit. Could have even sold more contracts, but profit is profit. So up on AMC as well. Clorox was another one. This was actually a pretty easy play. So as the market started rallying here, right? So really from May 14th, as it started climbing up, then there are a few, there are definitely a few pandemic stocks that would be affected by that. So ones that rallied heavily in the pandemic, Clorox being one of them. Obviously, people are fearful of germs, so a lot of the cleaning products were just flying off the shelf, and record-breaking profits and revenue for Clorox. But as the sentiment turned a little more optimistic, especially with these reopenings, then it was only right that Clorox go back and test at least the 21 EMA, and it does this anyway. So even during the height of the pandemic, Clorox had a habit of testing the 21 EMA here. So I opened up a Clorox put spread. Again, I sent this down in the alerts as well, but I probably closed it out a bit too early. You could see the Clorox put spread here was at 207.5, 210, and now Clorox is trading just shy of $200. So I could have collected a lot more, closed it out for profits. Again, profit is profit. I'm not going to argue with that. Okay, and if you've been following the news, you've probably seen this news story here. There is a bill to delist Chinese stocks. And, this has to do, this is a very multifaceted story here. There's a reason that this narrative exists. Obviously, it has to do with a few Chinese companies like Luckin Coffee or Lukin, I don't know how you pronounce it, but it was delisted or going to be delisted for reporting fake numbers. And this also has to do with a backlash regarding the pandemic, right? The U.S. is looking at ways that it can passively punish China for the pandemic or not necessarily for the pandemic itself, but for the lack of reporting and lack of distributed knowledge regarding the pandemic. And this also has to do with the ongoing trade war between the U.S. and China. So there are many reasons that a bill like this would exist. So because of that, I took a look at some of the Chinese stocks. As I mentioned, Luckin Coffee, that one is already getting delisted. It tanked all the way down to God knows how much, below $2 already. But JD.com and some of these companies are actually profitable and have a large enough use case to be this valuable. But looking at JD.com, this one looks overextended to me. And, even if that story only influences my decision further, but this one looks a bit overextended. It is overbought on the RSI. It looks like it's peaking here. Just like some of the other stocks I mentioned, it makes a habit of retesting the 21 EMA after hitting these peaks. So I'm looking for it to tank here at least to around the $48 level. So we put in a short on JD. We'll see how that works out. Like I said, it looks overextended, even, aside from this news story here, but this one would just add more fuel to the fire. All right. And if you want the rest of the plays we're making, the rest of the options and stock plays we're making, link is in the description. All right. A couple of other option plays that you can still leverage. I opened up an iron condor on NVIDIA. They're reporting earnings after market today. But if you look at NVIDIA, as we saw before in the chart, but there was a massive rally up. And usually when you see massive rallies leading up to earnings, that the move after earnings isn't that huge, right? Because this is in anticipation of earnings, so it is likely priced in. Everyone and their mother is bullish on NVIDIA and bullish on NVIDIA earnings, so it's kind of already priced in for the most part. And if you take a look in Thinkorswim, there's this market maker move here, which estimates what the move for NVIDIA's earnings are. And it looks like a plus or minus $22. So this is basically calculating to one standard deviation that NVIDIA will move either plus or minus $22 depending on what the earnings are, right? If it's negative earnings versus positive earnings. So looking at that and taking that into consideration, taking that, that one standard deviation move into consideration, I basically opened up an iron condor and we are smack dab right in the middle of it. This is the price of NVIDIA currently, but basically here is the lower end and upper end of NVIDIA. So NVIDIA basically needs to close below 390 or trade below 390 and above 320 for me to make money on this move. Now, obviously, the upside is keeping it until expiration. I have this one expiring July 3rd, giving us a little bit of time to make adjustments if necessary. But you could see that the risk reward is actually pretty good. $3,170 if it stays within this range, and $1,830 if it falls out of this range. And I took a look at the probability of profit here. And again, you could do this in Thinkorswim, but by July 2nd, we'll just say the date of the expiration, there's almost a 70% chance that NVIDIA will be above 320. And there is, if we look at 390, there's almost there's an above set, so about a 73% chance that it will be below. So if you look at the risk reward here for this play, I mean, we're clearly getting paid well above odds here, right? Like I said, if we're right, 3,170, and if we're wrong, 1,830 for basically a 70% chance that you're right. If you're walking through a casino in Vegas and you see those odds, you would take it in a heartbeat. The other play I did is a Home Depot Iron Condor. I own a lot of Home Depot stock. So this was kind of a hedge, but also trying to leverage the move because Home Depot did rally a ton recently, right? This is actually one of my biggest holdings aside from Tesla, but Home Depot rallied a ton, and we are up, looking at this, about 58% on Home Depot since buying. But you see that Home Depot, essentially hit an all-time high, the same high that it hit before the pandemic, and has fallen down a bit. So as it has fallen down, I managed to open an Iron Condor here, leveraging this move down, assuming that if it already dropped, about 4%, that we wouldn't see that much volatility in the short term. So I opened up an Iron Condor that actually expires June 5th on Home Depot, betting that it would stay within this range of between 230 and 250. I do have a little bit of time to alter this if the trade doesn't go my way by next week, but we'll see. Depending on how the price moves, I might close this one early if we are up majorly next week. All right, lastly, let's take a look at Bitcoin. So looking at Bitcoin, as I said, it got rejected from the 9,900 level. In the short term, this was actually pretty easy to read because it was forming this inverse Adam and Eve, right? And this, if this was inverse, if this was an actual Adam and Eve, then you'd expect the price to go up. So naturally, you would expect the price to go down. And it was finding a lot of resistance here at 9,900, opened up a short at 9,900. I closed that out a bit early last night. I think it was like 94 when I closed it out and took about 40% profit on that. But, wow, if I waited, it's now below 9,000. And I do think that this will eventually turn into some kind of double top. And if the stock market sees a red day tomorrow, a sell-off, profit taking before the long weekend, then we could see Bitcoin retest 8,500 and potentially wick down to this massive support cluster that we see here. All three moving averages converging at the same point. We could potentially see a move down to here. In a larger view, 10.4K, which is this blue line here, is a major resistance point as Bitcoin does form lower lows every single time it hits this. It's one of the most violent rejection zones I've ever seen on an asset class. So for the long term, we do need to close significantly above 10.4K for a few candles in order for me to declare any sort of long-term rally. Otherwise, we'll continue to play the short-term trend. And if we fall below this resistance cluster here, if Bitcoin somehow falls below 8,000 and closes below, then that is extremely dangerous. I don't know that we make, lower lows than this, but every time Bitcoin got rejected close to this level, we've made lower lows. So I don't think we'll get lower than, whatever this was here, 3.5K or whatever the low is here. But if we do close below this support cluster here, then there is clear support for Bitcoin, at around 6,500, a level that it fell to the last time it dropped, and then a level that it retested on this drop before the rally back up to 10K. So that would be my target here for a buyback if Bitcoin does drop below this support cluster here. But that may be too far in the future. I do think that If we see a sell-off in the markets tomorrow, we will likely retest this support cluster here. All right, that is it for this video. Go ahead and sign up if you want access to the trade alerts, crypto, stocks, options. We run the gamut. If you want to learn how to trade options because it is super lucrative, I do one-on-one training. I'm maxed out for May. May's almost done anyway. There's about 9 or 10 days left in May, but if you want for June, hit me up on the Discord and reserve a spot. They go fast because I only do a handful. I only have so much time. Leave a comment in the comment section below. Let me know how you're playing this market. What moves are you making? What stocks are you buying, shorting, selling? What option plays are you making? Or if you have a question, leave it in the comment section as well. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.